Hi, I'm Mark Stelter, Director of Community Association Lending here at Itasca Bank Trust Company. Even after 20 years, I wake up every day with the same goal, to make maintaining properties as stress-free as possible for property managers and board members of any size association. So whether you're a manager, board member, unit owner, vendor, or just someone curious about life inside a community association, join me as I sit down with guests from the field. Welcome to Community Association Insights. Let's get into it. Hi, and welcome to another episode of Community Association Insights. My name is Mark Stelter. I am the Director of Community Association Lending for Itasca Bank Trust Company. If you've seen any of our prior episodes, you already know that we cover a variety of topics in our venture to try and create a library of educational materials for board members and unit owners, for business partners, anybody who's associated with the community association industry. So if you're a new board member, this is going to be a great episode for you to watch. If you're an experienced board member or property manager, I think you'll get just as much out of the episode as well. You can look back on any of our prior episodes. I have a terrific guest with me today, Cindy Fitz from CISA Insurance, and I want to welcome you to our podcast. The purpose of our podcast has been to, as I said, just kind of educate anybody who might be in the industry, somebody who maybe just moved into an association, maybe somebody who's on the board. As you probably know, a lot of board members kind of get elected maybe because nobody else wanted to run, and now all of a sudden it's like, what am I going to do? So our first episode, we had Cheryl Murphy from CAI, who you know quite well. And we've had property managers on. We had Simon Fox and Carrie Surratt from Associa. And then we did an episode with the attorneys, which was terrific. We had Carrie Bartel and Dave Bloomberg that came on. And so what we're trying to do is make our way through. And now we've arrived at probably the weakest point in my knowledge base as far as the association. So thank you for coming on.
Well, thanks for having me.
Yeah, I really appreciate it, because this is going to be an episode where I'm out of my element. I know enough about insurance that I have to get it. I don't know a whole lot beyond that, so we're going to really be relying on you to kind of pick your brain and get some information.
Hopefully you don't fall asleep.
Not at all. I'm very excited, and I know anybody watching is going to. So let's start with a little bit about your background.
Oh, thank you. I've been with CISA for 20 and a half years. I'm, proud of reaching that milestone.
That's great.
Before coming to CISA, I was in airplane insurance, and 9/11 hit, and we all know, I shouldn't say hit, 9/11 came along, and the whole world just changed. And at that point, I decided that airplane insurance just wasn't for me any longer. And thankfully, I had a friend at CISA, and they were hiring, and the next 20 and a half years has been history. CISA is a second-generation family-owned business. Our original owner, Robert McClellan, which many who are still around today knew Mr. McClellan, he actually penned the first condominium policy that was ever written in the United States.
Oh, wow.
So, our big claim to fame. Everything that we're working with today for these policies is built off of that history from the early 70s. So we're really, really proud of that. What else? My first day at CISA, as you alluded, I know Cheryl Murphy and CAI very well. My boss, Jennifer Eilert, said, by the way, here is a membership directory that I need you to edit, and that puts you on this committee with CAI. And so started my volunteering with CAI. I've been on the program committee, the legal forum committee. I am right now co-chair on the Business Partner Council, and I'm also on ILAC. So,
and that was one of the agenda items that we kind of covered with Cheryl when she was here. We were talking about the extensive amount of committees that people can get involved with at CAI, because it just there's so much to CAI. That's why I wanted her first, because I believe it. I told Cheryl, I really believe she's the most important person in the industry, because everything revolves around CAI as far as the community association industry. And then obviously all of us exist because of the property managers.
Absolutely.
So yeah, she's just a tremendous resource. So I didn't want to interrupt your introduction.
No, and even if you don't have the time to volunteer for a committee all the time, there's always help needed day of or prepping. So there's lots of ways to get involved with CAI, and it's so important to do that.
Yeah, that's true.
So, just a little bit more about me. Jim and I have 4 kids. They're all either married or very committed. We're so blessed with 4 grandchildren. We have one more
great.
we just found out on the way.
Oh, congratulations.
So, super excited about that. When we're not working, we're traveling, trying to find wineries. If you know me, I love my wine. And just doing local stuff.
That's a great goal to have.
Right? Absolutely.
So great. Well, thank you. We really appreciate you being here.
No problem.
So,
Thanks.
all right. So we're going to kind of dive in. And as I kind of alluded to earlier, insurance is just, to me, it's one of those mysteries in life that until you need it, you probably don't pay a lot of attention to it. And so when you and I were kind of talking about some of the agenda items we wanted to go through, it just got me thinking more and more, especially with regard to self-managed associations. And I pound the table with self-managed associations and the importance of retaining professional management. And it really became more crystal clear when I was going through the insurance information that you had sent me. I just can't imagine a self-managed board, just an average self-managed board. I'm sure there's some very astute, very well-run self-managed associations. But when it comes to insurance, it just seems like that is such a big potential weak spot for an association board with regard to both, what happens with the board insurance, the property insurance, anything related to the association, and we'll kind of get into that. So there's all kinds of banks out there, and there's all kinds of insurance companies that are out there, right? Mm-hmm. So I separate myself from my competition the best way that I can, and they do the same thing when they're in front of the boards. I have what I consider my strengths for Itasca Bank Trust Company, and they certainly have theirs. When a board member is looking at an insurance company or an agency to take over their insurance, what's going to separate one potential insurance agent from another?
Well, I think specific to our conversation is, do they understand community associations? It's a
unique animal, right?
That's right. Yeah, so many nuances. Even when we say community associations, that trickles down to, are they condos? Are they homeowners associations? Are they townhomes? Are they POAs?
Co-ops.
Co-ops, right. There's so many nuances under there. So that's really what I think we should focus on is, are they experts in there? Anybody can write a policy, but is it a good policy? Is it a policy that's compliant with the law? Is it a policy that's going to protect the board members, the volunteers, as well as the owners?
So CISA and some of the other agencies that are listed, let's go back to that CAI directory you kind of referred to.
Right.
Primarily underwriting for community associations?
Correct.
Okay. So obviously, if you're looking at an insurance agency, you want to look for somebody who's going to have the experience in working, and those are just questions that they can ask right up front. How many associations are you working with, community associations, or how long have you been working with them?
Right.
Just try to get a little bit of resume or a little bit of background on those associations.
Yeah, absolutely.
So then, all right, I finally decide on my insurance agent, and lo and behold, I pick CISA. So now,
Yay.
what are the challenges that a board member is going to be facing when looking at obtaining coverage?
Right. So first, we need to figure out: are you a homeowners association or are you a condo? And we can't decide that by just simply looking at a building. An apartment building that we all think is apartments could actually be condos now. They could have converted, or these days we have condos that are deconverting, but we won't talk about those today. Townhome style, up and down. Yep. Those could be condos, those could be homeowners associations. So we really need to look to an association's governing documents to start us down that path. What are you?
There you go. And so when we talk about governing documents, and I think we've kind of covered this in other episodes, but the governing documents in the state of Illinois basically start at, if you're a condominium, the Illinois Condominium Property Act. If it's a townhome, it's the, the Illinois Residential Not-for-Profit? I probably completely butchered
Right, with
that.
the General Not-for-Profit Act. And we also have CISA, which I always forget what that acronym is, Common Interest Community Association Act.
The attorneys knew it
Right.
when I had them on.
I always call the acronyms, so.
So, but the point being that the state level governing documents are going to take precedence first. And then under that, you're going to have your declaration. And really, any community association is going to have a declaration that's recorded at the county level. And that's going to kind of lay out a lot of the details specific to that association. And then underneath that's going to be the bylaws.
Correct.
And so that's going to be the first set of documents you'll look at?
Right. Yep.
Okay.
We have to figure out what we're insuring.
All right. And so when you're driving through, like you said, you could be driving through and you see, a 30, 40, 50 unit building. It's hard unless there's a sign in the front to know
Right.
whether that's an apartment, a condominium, or otherwise.
Right.
Cooperatives look just like any other building.
They sure do.
And you wouldn't know it without looking at that. And particular to, like you mentioned, the townhome style buildings. There's a lot of townhome looking properties that are actually formed as a condominium.
Right.
Yeah. So let's start with the condominiums.
So-
What's a challenge that a typical condominium board is going to be looking at?
The first thing a board, I think, would want to know is, am I covered properly? Is my building insured how it should be? Because if we don't have a structure, we don't have a community. So simply starting with the structure, looking at a policy, you want to look for the building value, and something a board member can do is go on Google Earth or get one of those little rolly tools to measure the length and width of a building. It's, these days it's really not too hard to do. Multiply that, the length and width together by the number of stories. Don't forget your basement. A lot of agents like to leave basements off to try to save some premium.
Okay.
So we don't want to do that. We want to
Right.
insure the whole building because, Lord forbid, we have an incident. We want that whole building put back.
Right, including the basement.
Right. Length times width plus the number of stories. That's going to give you a general square footage of the building. Even when we send our experts out to the field, they're going to come up with a slightly different number. It's, the human factor.
All right. So who's coming up with the value? Is that going to be done on your end?
That will be done on my end ultimately.
All
But
right.
to be an active participant as a board member, you can come in and say, I think I have this as my square footage.
Right. So as a board member, I can take those measurements.
Yeah.
And then when I get the value back, I'm going to look at what was the numbers that were used in the computing that value.
Right.
And if it's significantly off than what I'm coming up with, at least that's a starting point for a
Right.
conversation.
It's a good conversation, and it's a way to engage with your agent and to understand the process that's going on. The industry always has a dollar value that they're putting for your construction, whether it's brick, masonry, non-combustible, fire resistive. There's different values each year to come up with the different component values. But, so that's where we start. Let's figure out the building value.
And I think you had mentioned that the value of buildings has increased, I think, rather significantly, right?
Rather significantly.
Okay,
Yeah,
over what period of time?
Over the last 3 years,
Okay.
as we're seeing everything else in the world going up.
And when you say
building-
value, are you from the insurance side of it? I'm assuming you're looking at it as if we have to rebuild.
Correct.
Are you looking at materials and labor and things like
That's
that?
right.
When you say that the values are going up, meaning the cost to rebuild
Right.
the property is
Absolutely.
going up. And then code insurance, does that factor in as far as if I have a building that was built in the 70s
Yes.
and that gets destroyed or somehow damaged, I'm assuming the governing municipality is going to expect that the building gets rebuilt to current codes?
That's right. That's right.
Okay.
Yep. So we'll bring that ordinance and law piece in as well.
Is that what that's called? Okay.
It is.
The ordinance and
It
law
is.
piece.
So,
Okay.
Mark, when we're looking at buildings and insurance policies, there's a couple of different ways that we can value buildings.
Okay.
So the Illinois Condominium Act, which is so well written and gives us so many clues that it makes our jobs easy, says that the coverage for the building needs to be the full replacement cost. So taking that length times width times today's current value for your construction is going to tell us. That's the full replacement cost.
So you're going to look at length times width with the stories of the building. So you're going to take a construction figure, I'm assuming, on a per square foot basis?
Correct.
And just factor that in?
And just factor that in.
So that's how they're going to arrive at their
Yep.
number.
And some insurance companies will just use that number, whatever that is, the $100.
Okay.
And that's going to be the full replacement cost. Some carriers will go into an extended replacement cost, where they'll add a little cushion in there in case something happens. The price goes up, we made a mistake, whatever, factors have changed. So they'll put a little cushion in there, 10, 15, sometimes even 25%.
Right.
And then there's companies like CISA, and we only have one other competitor, and I am not telling you today who that is.
That's okay, I don't mention my competitors either. I love my competitors, but
right. That's right.
No need to mention them.
No.
Give them a commercial for my competitors.
That's right. But we write on a guaranteed replacement, which is really unique and a very hard thing to wrap our brains around. But it's basically limitless coverage. So Cindy Fitz measures your building, does all the proper steps I'm supposed to do, and I come up with that $100 figure. And the underwriter agrees, that looks good, makes sense, we write the policy. Something happens, Lord forbid, tornado comes through and we're all living in Kansas now. And we need to rebuild, and it comes to fruition, I made a mistake. I left off half the building, I forgot the roof penthouse, whatever could happen. And now the building is going to cost $200 to replace. CISA is going to replace that because we have guaranteed replacement. It's limitless, capless coverage.
And is that something that's readily offered in the industry by other agents?
No.
Or it's not? Okay,
Nope.
so that might be something
That is
where you're
something
separating
pretty
yourself
unique
from
to
your...
us.
Okay.
Right. Another carrier, like I said, has $100 written. That's all they're going to give you.
Okay.
Somebody else might put 25% on. Now you get $125.
Okay.
Who makes up that gap?
So those are important questions to ask.
Right.
Right.
What kind of coverage is it? Replacement cost, extended replacement, or guaranteed replacement?
Okay.
Very important factors.
Okay, that makes sense. So maybe walk us through a little bit, if I'm in a condominium versus a townhome association, what is going to be a primary difference in terms of the type of insurance I'm going to be getting, and what am I going to be replacing if something does happen?
Yeah. I'm assuming that question is the townhome is not a condo.
Correct.
All right.
A true townhome association.
The basic answer is it depends. I don't know.
Okay.
We have to read and see what the governing documents is requiring of those townhome
So we're going
owners.
back to the declaration.
Going back to that.
And we're looking for common elements?
We are
listed?
looking for the insurance section
Insurance section?
of the
Okay.
governing documents.
And that's going to tell me...
And it's going to tell you, do you insure the structure?
Okay.
Do you insure just the roof? We have some associations that will insure the four walls, so to speak, of the actual whole building. Obviously, if there's townhomes, there could be 4, 5, 8, 10, whatever units all attached. But, sometimes you're only responsible for that portion of roof that's over your unit, so 20% or whatever of that roof. It's kind of crazy.
So if there's a fire in a unit, and we kind of talked about this, whether maybe it's a 4-unit townhome association or an 8-unit townhome association, and there's a fire in the middle unit.
It's always the middle unit.
It's always the middle
and they're always not insured right. I don't understand how the odds are that it works out. So now you have this gap.
Right.
Right? And you have two owners, or however it works out on either side, and you got this big hole in the middle.
So I got good shingles over here, I have good shingles over here, and I've got a burned out roof over here.
Burned out roof.
They're going to rip everything off?
It's going to depend on what the city actually tells.
Okay, so now the governing
documents,
municipality is going to get involved.
Right.
Okay.
Right. And they have to determine, does the whole building need to be destroyed and rebuilt, or was there not so much damage that maybe it is just a little hole in the roof. They got there just in time, and the odds were with everybody.
And I had an association, it was a townhome association in the northern suburbs that did have a fire, and it was fortunately an end unit. And so I was driving through and kind of just keeping an eye on the construction, and they actually had to rebuild that entire end unit. And so then, that comes down to, can we make that unit look like the rest of the association, which is probably a challenge unto itself for the contractors.
Right. And, now does that unit owner have the right insurance? Were they told they were a condo, so they only have walls in coverage, which I think we'll talk about in a minute?
Yep.
Or do they actually have structure coverage, much like a single-family home, that you cover the outside all the way through? Everything is your problem,
Right.
or your solution. So, were they insured correctly?
Yeah.
And townhomes, I think, are probably the most often that are not insured properly.
The townhomes are?
Yeah.
Okay.
Because either people make assumptions, agents don't quite understand, and they assume. So it's, again, even as an owner, it's really important to understand and ask those questions. Am I a townhome? Am I a condo? Who insures what? At CISA, every year we send out a little letter that reminds people how they're insured.
All right. And so as a unit owner, I think one of the key takeaways from this for you individually, and we'll ask Cindy to kind of address this as well, is it's one thing to have the structure rebuilt, but then you're going back into your unit and likely most everything was destroyed either by the fire or by the water damage or, something during the, putting out or whatever if it was a fire or some other, cause of damage. Your couch, your bed, your dresser, your kitchen, all that is inside your unit. Is not always covered by the association's insurance, correct?
Right.
Okay, so now
Right.
What do I do as a unit owner to prepare for what if something happens and my neighbor's, my contiguous neighbor's unit is on fire, but the fire department didn't just put the water on their unit, it came over to
Right.
mine, and now all of my stuff's been destroyed.
Right.
What insurance is the unit owner going to be getting?
And again, it depends on whether you're a condo or not. Condos get HO6s, which is a unit owner policy, and that's going to cover.
So condo owners get an HO6.
Condo owners get an HO6, and that's the walls in coverage.
Okay.
So just to back up a minute, the association for a condo would cover from the first coat of primer inside the building to the outside.
To the outside. Right.
The unit owner then covers what's ever on top of that first coat of primer. Wallpaper, paints, paneling, whatever those wall coverings are is then unit owner responsibility.
So if I'm a condominium owner and I have damage that's done, let's say we'll stick with the fire, fire's been put out, I'm displaced for a period of time, they've rebuilt my unit, I come back, and it's going to be a shell.
It's going to be a shell, right.
Okay. It's going to be empty, and I'm going to be responsible for filling that back up.
Right. And an important part of that is also the association only insures through the subflooring. So your carpet, your hardwood floors, your tile, none of that.
That's all
unit owner responsibility.
Okay. All right, that's important
Now,
information.
just to have some fun, what if your cabinets and your countertop were installed by the developer?
Okay.
You are the original owner, which makes this conversation easier, but you're the original owner, so you've never updated. Or maybe you're a brand new association and something happens. But whatever, the original installed cabinetry and fixtures are insured by the association.
The original installed cabinet and fixtures are insured by the association.
Right.
Okay.
Once a unit owner has made an upgrade, cabinets, countertops, faucets, toilet, those then become unit owner responsibility.
That's a huge distinction.
That is a huge distinction.
Because if you've ever replaced your kitchen or updated your kitchen, that can be a pretty good price tag.
That's right. And if you're the third or fourth owner, how do you know?
Right.
How do you know?
And I'm assuming it's incumbent on the unit owner to be able to prove.
Right.
Because board members change over time, and not everybody is keeping maybe the best records or receipts.
Right. So I know with CISA we work with some pretty good adjusters who, they can maybe knock on a neighbor's door and take a peek at what they might have, ask some other questions. But, when you're the third, if you're not the original owner, I suggest that you insure all your countertops, cabinets, fixtures.
Okay.
It's a little better to be safe than sorry at that point.
So if I'm a condominium owner and I'm just moving in, in addition to everything else that I'm doing to furnish my unit, I really need to have a conversation, a very in-depth conversation with my insurance agent.
You do.
And ask really pointed questions and understand my coverage.
Right.
Yeah.
Right. I mean, you just think about, I don't know, as a man, but, as a girl, I got a lot of pairs of shoes. And if I had to replace all those shoes,
that
contents is a lot of limit. And people really shortchange themselves, I think.
Yeah, and in the I guess they would call it the old days. They used to encourage us. My kids grew up in the era of the camcorders.
Oh yeah.
Right, and so the advice was always go around with your camcorder, videotape all the contents in your home or unit or your dwelling. And then put that in your safe deposit box.
Right.
And
Great.
That way you've got some evidence and then maintain receipts and things like that so that you can at least go back with some level of documentation. Now you can do all that with your phone.
Well, right. Same premise though.
It's the same concept,
right. Save
it to the cloud, and at least you've got an idea. So, now it's easy. You walk around with your phone, you video everything that's in your dwelling, and then, if you save it to the cloud or you have some, backup, at least you've got something to show.
That's right.
Save receipts for expensive items, be able to at least identify them so that you can get maybe a current market value of what those might be.
Right.
Okay, that makes sense.
One other really important piece for a unit owner is a coverage called loss assessment coverage. So an association, when they have a loss of fire or water, whatever, but fires in particular, if they can prove that it was caused by the unit owner. So I know CISA had a unit owner fall asleep while smoking and, caught the unit on fire. That loss, per the Condo Act, can be charged back to that unit owner. And you would use your attorney to go through that process and make sure you're handling it correctly. But the association then would have the right to charge the association deductible back to that unit owner.
Just the deductible?
Just the deductible. Well, yes. There is a way to charge the whole thing back.
Call my attorney.
Call your attorney. There's a way to do the whole thing too. But for the deductible purposes in Section 12 of the Illinois Condominium Act, a unit owner can get coverage on their unit owner policy called something like loss assessment coverage. Each agency or carrier has a different name for it, but loss assessment coverage. So if your association has a $5,000 deductible, you want to make sure your policy has a $5,000 deductible too, so that you can get that money from your insurance company instead of trying to come up with it on your own.
So my insurance is going to cover that gap, is going to cover that $5,000.
Right.
So if somebody had a grill on their wooden deck and forgot that it was on, I had one of those too.
Yes.
Where it was, and again, it was a middle unit and all that. So they took the grill outside. They forgot that it was there and it caught fire.
That'll happen.
Things happen. Right?
They do.
That's why they have insurance.
Right. Or, wind kicks up. We've had some crazy wind these days and, not even thinking about that.
So you mentioned specifically within the Condo Act, the insurance section?
Yep.
Which is
Section 12.
Section 12?
Yep.
And then you sent that to me.
I did.
And I got really nervous because I started reading this, and again, I always go back to self-managed associations because,
right.
In the world of the Illinois and specifically the Chicagoland Community Association industry, there are phenomenal property managers. You just need to interview, you need to talk to them, you need to ask questions, get references, and you'll find that there are just many really good professional managers who understand this. They're licensed, they have continuing education credits they have to get. I just have a hard time believing that a volunteer board member who has responsibilities, whether it's a career, family, whatever interests are out there, and I talk to these self-managed boards all the time because we're one of the few lenders, a lot of times the only lender, that will, under a certain size, I think it's most of my competitors around 25 or 30 units, on anything under that they don't want to look at. So, we look at it, we go all the way down to 6 units. We do work with self-managed associations, but they just have a a host of issues they have to, try and either understand or solve, and insurance being one of them. And as I'm going through this, this is talking about all the types of insurance that an association has to have, and I don't know that a self-managed association is always going to understand that, just because there's nobody there, like a property manager, to say, hey, let's take a look at your insurance policy.
Right.
So
Right.
there, we kind of covered the physical aspect, replacing the physical property, contents, things like that. But then there's also other types of insurance.
Absolutely.
For the board, right?
For the
So
board.
let's go over that a little.
Yeah, directors and officers. I would never volunteer in an association and not have directors and officers coverage. Saying that, I will honestly say I do have associations that don't have that coverage.
Okay.
There is no other policy that you as a volunteer can purchase that's going to protect you while volunteering on your condominium board.
So it's often referred to as D&O insurance?
D&O insurance.
What does it cover?
That's right. It covers the board's decisions and indecisions that they make. So all boards have to decide, are we going to repair the roof? Are we going to replace the carpet in the hallway? Are we going to repaint? Are we going to pave the parking lot? I mean, as you said, there's just a plethora of things that board members have to decide. And of course, as they're deciding that, they have to prioritize. And, sometimes a board might prioritize incorrectly.
Right, because they all cost money.
They all cost money. Yep, nothing is cheap.
Okay.
And, and even when they do make the right decision, something wrong could happen. So this is the coverage that if a lawsuit is brought against the association, the entity of the board that's, representing the building, the community, this is where the lawsuit would be directed.
So I'm looking at general liability, and I'm looking at fidelity.
We're looking at directors and officers. We'll
Okay.
talk about general liability and
Separate
fidelity
from
in just
D&O.
a minute. Yeah,
Okay.
separate from D&O. So we're actually just talking about protecting our board members right now.
Give me an example of kind of a decision, but what about an indecision?
Indecision is we're not going to replace the roof this year. We think we could probably get another 2, maybe 3 years out of it. And then we get a big hole in it, and
Heavy snow
falls through something, and the unit owner that's right under that roof is probably going to be pretty upset and say, you knew that this was a problem, and they could bring suit.
Is that covered? That indecision?
A judge would have to determine that.
Okay.
There would definitely be defense to at least start with.
Right.
Things that wouldn't be covered would be, we know the roof is bad, we don't feel like it. We'd rather plant petunias this year, make the outside look nice.
So like a clear and obvious departure from
negligence.
Safety, safety and soundness, or the life safety issues that are there. Okay.
Right, absolutely. The Condo Act has a whole list of things that need to be included in the D&O. I think if you're a homeowners association, a townhome association, whatever, I think you should go through that condo list and make sure you have all of that. You will be uber protected, and that's what you really want for your volunteers. It's worth it to have that protection. I will encourage one other thing that the Condominium Act does not address, and it's discrimination. When 5 years ago, when we talked about discrimination, we would talk about things like color and race and creed and, that silly Susie down the hallway who hasn't paid her assessments and, boy, is she a loser. And, we could get in trouble for those things.
Right.
Today, we're
expanded.
talking about masks and no masks.
Yep.
We're talking about vaccinated, non-vaccinated, and it's become such an everyday part of our conversation that sometimes we don't even realize we're talking in a discriminatory way.
Right.
And so I think that discrimination piece is just so valuable, and a lot of carriers don't have it.
But it's available.
It's available.
Okay.
CISA does have it on our policies. Just very important to have that. Mm-hmm.
Yeah, that's interesting.
Yeah. Do you want to jump back to that general liability?
Yeah, so let's go through general liability and then the fidelity.
And the fidelity,
bond.
right.
The $1 million that I saw they have to have, which caught my attention.
For general liability, right. So when when we're talking about general liability, it's typically bodily injury on the property. Somebody slips and falls going up the stairs or on the walkway or
Unshoveled
parking
snow,
lot,
ice?
shovels, snow, ice, any of that. Somebody has sustained an injury on our property.
Okay.
And so they'll go to the hospital, they'll get bills. Hopefully the bills are little bills. We don't want anybody getting big owies. But,
Right.
If they do, they would need to file a suit against the association. And the general liability is what's going to react in the event of that happening.
Okay. So that's the liability.
That is the
portion of it.
liability.
Okay.
$1 million is typical in our industry for a per occurrence. If you get really hurt and you need more coverage, you would need an umbrella coverage, and that would be the coverage that goes above that
Okay.
coverage. So, you think about that little umbrella that we see from that one particular carrier. It extends over that general liability if somebody gets hurt for more than $1 million.
Okay. And that's available as well.
It's available as well.
Okay.
Yep. So Fidelity then, all unit owners pay assessments. And so the Fidelity is what protects your money. People stealing it. We have some savvy people out there. I wish they would use their talents for good, but
Right.
there's some that really don't. And they figure out how to break into banks, break into bank accounts, how to write bad checks, how to, what was the term I just learned? Bleach. How to bleach checks.
Yeah.
And so we need to protect our investments, and Fidelity is what protects that.
Okay. So now you're going to make me define bleaching check. So when so the bleaching of a check is if you look, just a standard pen, right? You write a check. What the people with nefarious intentions will do is they will take that check and they'll turn it upside down and they'll put it in a solvent, and that solvent will not destroy the paper or the check, but it will erase the ink and it will retain the signature because you wrote that check out and you signed it. So now they have a check where the pay to the order of and the dollar amount are gone, but the signature is still legit. And so when the check is presented for payment and the bank looks at that check and they say, well, that's a valid signature according to our signature card, but they've changed the dollar amount and they've changed who it's payable to, and that unfortunately happens more often than not. So the solution to that is to get kind of almost like a Sharpie, if you're going to use a brand name, and that would be just something where it can't be bleached off, it can't be removed because it actually dies into the actual paper part of the check and it can't be removed. So there's your banking 101 lesson for today with regard to your checks.
Yeah.
So keep going.
Yeah. So Fidelity is really important to protect our investments.
So the Fidelity part
owners.
comes out of fiduciary? Is that they have a fiduciary responsibility to maintain the funds and maintain accurate records and whatnot, and then when and again I've talked about how we have a lot of property management firms. The overwhelming vast majority of property management firms, not just in the Chicagoland area, but I'm sure across the country, do a phenomenal job every so often, and we've seen it in the paper. It doesn't pop up very often, but every so often there's one where there's an accusation made that a professional managing agent has either mismanaged the funds or absconded with the funds, and I'm assuming that's going to be covered because I saw in here that the managing agents have to maintain insurance as well if they're going to be in charge of and managing those funds.
Right. So we do have managers that have authorization on the operating accounts. Sometimes you just want your manager, whatever your contractual deal is, but to pay certain bills. And so they have the authority to do that. What we never want to see is a manager who has access to an association's reserve account.
We talked about this with the lawyers too.
Oh, did you? Okay, good.
I asked them, and I tried to pin them down on it, and they were very consistent with what you just said.
Yeah, yeah. So we never want them to have access to that. That should strictly be board access. However, that is out there.
Yeah. So now you've heard it. You've heard it twice if you've gone through all the videos where the lawyers and the insurance agent is telling you that if you have reserve funds, those should be under the control of the board, The best intentions are to make it convenient, and I get it, because property managers spin a lot of plates during their average day, and it's a lot more convenient to be able to write those bills, write the checks,
Right.
get it all taken care of, and that's all well and good. But the reserve funds are for common element expenses, which come along on a much more infrequent basis, and those you're saying should be handled by the board.
The common
Control. The control of the reserve funds.
Right.
Yeah.
Right.
Okay.
Absolutely.
Yeah. Okay.
Yeah.
That makes sense.
So the fidelity is specific coverage for the money. Should be the annual assessments plus the reserve fund balance.
Okay. Right.
Thoughts before the Condo Act was updated back in the early 2000s was only 3 months of assessments. But the Condo Act does say all funds available to the association. And so if you're looking at a 12-month period, all funds available is that annual assessment amount.
Oh, okay.
Yeah.
Okay.
So plus the reserves, and that'll make sure that you're properly covered.
Okay. Anything else on the insurance section?
We
can cover?
touched on the ordinance and law a little bit, but we didn't talk about it. So going back to the building coverage, if your building has to be rebuilt, as you stated earlier, the city's going to require you to bring that up to code. And the Condominium Act, again, clearly outlines this for us. If you're any other kind of association, you don't have that guidance, but this is still good guidance. There's 3 parts to it, and there's the part that addresses perhaps the undamaged portion of the building. So we see a fire in half a building or 3/4. So somehow that has to be addressed, whether it's being knocked down or there's enough left that it can be brought up to code. But the Condominium Act requires that coverage, which is called coverage A, is the full value of the building. So whatever that replacement cost is that you have, that's what your ordinance and law A needs to be.
Okay.
Then there's 2 other parts, B and C, and B is demolition cost, and C is increased cost of construction.
Okay.
And when we think about it, when we have some of these really bad things that we see, the tornadoes ripping through down south we've seen lately, I don't think they're going to bring in discounted bricks. They're probably going to bring in full price bricks, maybe a little higher. Before COVID.
So they're not going to go to the slightly damaged section and get their bricks from that? Okay.
Right. Before COVID, 2x4s were what?
Right.
$5, and now they're $11.
Right.
I don't know why wood was affected by COVID, but so that's our increased cost of construction. The Condo Act says we have to have $500,000 or 10% of the building value. I make sure I have that stated correctly. You can use your notes as
much as you want.
But make sure I say it right.
Nothing but papers here. That's okay.
So if you don't have the right replacement cost, for whatever reason, whether it's an honest mistake or somebody's trying to save premium so they lower that,
right.
If you don't have the right replacement cost, you are not going to have the right ordinance and law coverage.
Okay.
So this all impacts, and again, why we should be using professionals who understand what's required by the law to make sure that these are right.
All right. So you're just, you're a well-intended insurance agency that does a lot of single-family homes, automobiles. I'm going to, wrap everything up into one with my, all my insurance, and we see all kinds of commercials on that. May not understand all that goes into community association living.
Right.
You had mentioned a reserve study. And
reserve study.
Reserve studies, and we've talked about it if you've watched any of the other episodes, the reserve study is going to be basically a listing of your common elements as defined in the governing documents, specifically the declaration, where a architectural or engineering firm is going to come in. They're going to look at all of your common elements, the roofs, the siding, the bricks, the elevator, things that are listed, and they're going to put together a plan up to, I've seen 20 years, I think is pretty common, or beyond, because some common elements like bricks, they'll last way beyond that. So they're going to put a long-term timeline together as to how long is the useful life of each common element starting from today, and then what's the cost to replace or repair those common elements into the future. So if you have 2 elevators in your building and the reserve study says, well, in 10 years you're going to need to replace certain portions of the elevator, it's going to tell you what they believe the dollar amount's going to be in the future and what you should be reserving between now and then. So it's basically a guidebook to maintaining the property in the best possible condition, taking into account aging of the elements, because obviously nothing lasts forever.
Right.
So how does the reserve study work into the insurance end of things?
Well, first, when you pay for that reserve study, you should use it.
Good point.
Dust it off every year, especially around budgeting season.
Yeah. And they should get one every 20 years?
Boy, I don't know. I think it would be sooner than that.
How often should we get a reserve study?
We have to ask our reserve specialist about that. I don't really know the answer to that.
I've heard all kinds of answers. I don't mean to put you on the spot.
That's okay.
I've heard updated every couple of years, just to, if you use the same firm, update it every couple of years and kind of get new figures.
Yeah.
And all the reserve study firms will say, I'm sure, at least every 2 years. So that would be good.
Yeah.
But
so how does that factor? Podcast.
There you go. How does it? We'll work on that one.
Yeah.
How does that factor then into the insurance?
I mean, you have to budget every year. So are you funding that reserve study so that when your roof does need to be repaired, when your other components, your air conditioning unit, your boiler, whatever components are in there that need to be replaced, is that funded? Are you going to have to get a special assessment? If you're not funding it at all, how are you going to pay for the roof?
Is my insurance carrier looking at my reserve fund compared to my reserve study to make a decision on what my premium should be?
Illinois does not have a reserve study requirement yet.
Okay.
And I say yet.
You are on ILAC, so... And
ILAC, no, I'm not giving away any ILAC secrets. No.
ILAC being the Illinois Legislative Action Committee for CAI, and they just work with the legislature to, work on legislation that is beneficial to the community association industry. So I'm not implying that.
No, that's okay. But there are states that have, especially since we had the collapse in Florida, they are requiring reserve studies. So I wouldn't be surprised if, it didn't make its way to Illinois at some point.
Sure. And it just, it kind of makes sense. It seems common sense to be able to know if there's issues with the common elements, right?
And so maybe not always looking at a reserve study and whether it's being funded, but asking, has your boiler been replaced?
Right.
When was your last roof update? When, have you had a roof inspection? Do you know when you're going to replace your roof? I mean, those things are all asked by underwriters. Yeah. When was your last tuck pointing? If you're not tuck pointing in Illinois, you're going to get water in your building. There's just no way around it. So I think all of those things factor in whether it's a formalized process or not, looking at that reserve study.
And, you kind of touched on Florida with Champlain Tower South, and we kind of said we weren't going to delve too far into that just because there's already a lot that's been written. There's a lot more that's going to be written on it. But I think what we kind of agreed is there's lessons to be learned just from what we do know. There's a lot we don't know, but just from what we do know, and that does tie back directly to that reserve study.
It does. I mean, boards have to be able to maintain their building. They know the difference between right and wrong. You ultimately know if your roof needs to be replaced this year, if you can wait 10 years.
Right.
Boards need to take that fiduciary responsibility very seriously and fund their buildings. Do what needs to be done. It might be painful. You might have to do that really horrible special assessment that is, perhaps going to hurt that single mom down the hallway, but you have to run a business like a business. And when you're dealing with your community, it is a business. And sometimes we have to pull the emotions out, which is so very difficult to do because I'd like to think that we're all pretty close with our neighbors.
Yeah, absolutely. And it's you mentioned as far as running it like a business, and that is true because we've talked about that on prior podcasts, which is you really are. It's a not-for-profit corporation.
It is.
You're running a corporation, even though you're a volunteer, and you may not have a specialty in running a business, but you've been elected, you're in the position, and it has to be run. It's not just my personal household budget. This involves my neighbors. It involves sometimes millions of dollars in revenue that's running through and expenses that are coming through.
And how often, you must hear it as often as I do, oh, we're so proud we didn't have to raise our assessments this year. I don't find that to be a good thing. I hear red flags and really bad bells going off in my head.
I hear the same thing.
Yeah, that's not a good thing.
Right. No, I hear the same
it means
thing.
you're not taking care of something.
And I've been in those meetings where you kind of talked about before, deciding what am I going to repair and what am I not going to repair.
Right.
And sometimes I hear the boards talk about, and the manager is ringing the bell and pounding the table that we have a life safety issue, and whether it's the city of Chicago or one of the local municipalities out in the suburbs, they are going to come in and they are going to tag the property and either start fining you in large dollars, or I've seen it where they're going to make everybody move out.
Right.
Especially if you have exterior balconies that are your main entrance into your into your unit. If those are deemed as not being safe, they're just going to shut it down and get everybody out and require the board to make those repairs. Right.
And we always run into those owners too. Well, I'm not going to live here in 25 years. I don't care about the roof then.
Right.
It's kind of, well, too bad. You live here now. This is our responsibility now, is to plan for the future. Just like planning for retirement or planning for that new car that you want to buy in a couple of years. That's what this business has to do. They have to replace their components. They have to maintain the community.
Yep.
And we all live here now, and that's what we do.
And then if we take this back to the D&O insurance, the directors and officers insurance, that is not a catch-all.
It is not a catch-all.
I mean, there are...
Intentional negligence is not covered.
Okay. Good term.
Yeah.
But that's important.
It is important.
And maybe, if you can, just detail out a little bit about what kind of actions might fall under that.
An easy one would be we need to have something with our electric or our plumbing updated, and my brother-in-law is a plumber. He can take care of that, no problem.
Yep.
I actually had this happen in a building.
Yeah, sure it does.
The plumber had his blowtorch because he had to solder something. He burnt down the building.
Oh, okay.
And now that's your brother-in-law who doesn't have insurance. You knew that. You just brought this guy in, and I guess we should make sure that's in a common area, because a board member wouldn't be insuring a unit, but if it's a
but there's boilers that heat the whole building.
Yeah, the boiler.
It
would have to be somebody that the board hired to do a job, and we know they don't have insurance, and the really bad thing happened. And that's why you have insurance, because of those really bad things.
I mentioned this, I think, with Carrie and Dave when they were on, where one of the previous podcasts, where there are boards that are hiring contractors, and the contractors are not going for permit with the local governing body. And I just don't know how that is something that's acceptable at the board level, and maybe it's more common than I know, but that just seems like a big red flag. If they're not
pulling permits, I bet you they don't have workers' compensation insurance either.
Yeah, I mean, it could be a whole, that could just be a domino effect, right?
And, associations, when they hire somebody, they're like, well, we don't employ them. They're just our contractor.
Right.
We don't care if they have workers' compensation or not. Well, the workers' compensation law in Illinois says when that person's on your premise, they are your employee, because you agree to a start time, you agree to a process, and you agree to a payment. And so we always like to see that the contractor has their own workers' compensation coverage. It should be proof given to the association, but there's also a catch-all way that if something should fall through the cracks, the association can get a workers' compensation based on them having no employees, based on the fact that everybody who comes on premise has proof of insurance readily available and given and maintained by the association. Having that workers' compensation proof protects the association in the event that something happens. Somebody is working, they fall off the roof, or they get burnt in a fire, or. Yeah. There's so many things. So that workers' compensation is important for associations, and they should have it. There's minimum premium policies. It's not painful.
So if I sit on a board of a 30 unit condominium building, and it is, let's say it's all brick, and we're having the tuck pointing taken care of, it's all scaffolded, and I've got a contractor who's on site for the summer, 90 days, 4 months, and I don't have workman's comp insurance as a board, and the contractor doesn't have workman's comp insurance, and somebody gets injured, what happens then?
The judge decides.
Okay. So the worker, I'm assuming, is probably going to just sue everybody.
He's going to sue everybody, right?
That's typically what happens.
Management company, the board,
from the board's
individual
perspective,
board owners, board members. I mean,
so from the board's perspective, is there a policy that we've talked about or a coverage that's going to kick in?
It would be workers' compensation. It would have to be. There would have to be a specific general liability that we talked about. Getting hurt on the premise excludes employees.
So can I get workman's comp insurance as a board for specific periods of time knowing I'm going to have work done on the property?
They typically don't do that.
Okay. So
it's a contractor can do that.
Right. So if I'm a board member, my first line of defense is I need to make sure my contractor has it, obviously. And then you're saying secondarily to that, to have that belt and suspenders protection, that maybe the board should be looking at also having the
Right. Okay. And, any of those contracts that you have, and the project you just described would be a pretty big project. You want to have your attorney review those contracts before you sign. Let your insurance agent review it too.
Right.
And the insurance and the attorney, we can talk. We've done that. Sure. We like to do that and make sure that you're protected, and the amount of additional funds that you have to pay to have those things done, not so much with the insurance, but those attorneys.
Right.
It's worth that investment to make sure that you're properly protected.
Okay. Is there, I guess just to kind of have the check and balance, if I'm working with a specific insurance carrier, are there resources available where I can take my policy to somebody else and say, can you review this for me and let me know if there's any weak points? How do I go about doing that as a board member?
I think you ask
just another
around.
Insurance carrier?
It's usually just another insurance agent in the industry. We do. It
could be on a time basis or something.
Right.
For your time.
Yeah, there are people out there that do consulting. Like that. Typically, if I am being asked to quote a property, I'm happy to review what they have and, use that as a roadmap to our conversation. I think this is good. I think this could be better.
Right.
I don't see this at all.
Right.
So I think that's pretty normal for us as agents to help review that in our quoting process.
Great. You are a wealth of information.
Thank you.
So I can't thank you enough. So we kind of had a final thought that you had written down. If you want to kind of,
Yeah, I do. I mean, and it's really to just reiterate what we've kind of weaved through this whole thing. No matter if it's the insurance, if it's banking, if it's attorneys, even with tuck pointing and roofs and restoration for sure, it is so important to use our industry experts. They understand what is needed in all these aspects. And if you don't know somebody and you're having a project, you have your list of people that you share. I have my list.
Sure.
Ask us. If we don't know, we know somebody who knows.
Right.
And, we would rather have you protected properly.
Yep.
Share those. So always using that industry expert and, just looping it right back to the front. CAI does have that membership directory. So utilize that.
Yeah, and it's funny because when I was talking to the attorneys, to David and to Carrie, and I said, well, next episode I want to do is on insurance, and it was almost like in lockstep. They turned around, you need to talk to Cindy.
Oh,
so
they're so great.
Clearly, having that reputation for being an industry expert is very helpful, and it does go throughout the industry. It goes, for the banks. It doesn't. It's a very short list of banks that are true experts at understanding this, and it goes to the roofers, it goes to the paving contractors, landscape, pool, everything. There are people that just understand what it's like to work with a community association.
Right.
And I would just again, and I don't think I can overstate it. If you're not a member of CAI Illinois, just look into it. Become a member of CAI. It's CAI-Illinois, all spelled out, .org. Contact Cheryl Murphy. Find information out about CAI. There is just so much information, so many resources, and you'll find experts in every single industry that touches community association living. It's completely worth the expense, and it's just my recommendation that you should do that.
Phone number for CISA, 847-870-7000, and first initial last name, CFITS, at CISAinsurance.com. Insurance all spelled out.
Insurance all spelled out?
Yep.
Great. Any final thoughts? Anything I missed that you want to cover?
I just appreciate this opportunity and sharing with you. It's great.
This has been terrific, and again, it's something that I actually learned so much more just having this conversation that I'm going to be able to take back to my meetings with board members and property managers. So thank you so much for being here.
You're welcome.
Cindy Fitz from CISA Insurance.
Thank you.
Thanks. Take care, everybody.